In the 4th century BC, Greece was the first country ever to default. I hope that we're not going to repeat history, or do you think that we might just do that once again?
Well, unfortunately, Greece is in a very difficult situation at the moment, whereby the level of debt it has on its books and the amount of interest it's paying is at unsustainable levels at the moment, and I feel it's only a matter of time before Greece defaults. Whether it's an orderly default or a disorderly default is another thing altogether, and whether it spreads across Europe and it has that contagion effect that everyone's been talking about, again, it's another thing altogether. I think it's probably in the best interest for Greece to be able to default on some of that debt that it owns, and then to come out of that mechanism of the EU, which has been restricting it, and revert back to growth, revert back to its own currency, and export its way back to recovery.
Manoj, do you get the sense that perhaps in the background we are starting to see perhaps some kind of structure being formed by the IMF or the Troika, of course with the ECB, the EU and Greece, to try and find some way of partially defaulting and then of course ensuring that the austerity measures are being implemented? Because we see over a period of time the same rhetoric coming through, and then it seems that people becoming more, well, warming up to the fact, policymakers warming up to the fact that a possible default is on the cards.
Well, that's exactly how they've been going. They've been trying to talk up the game that a default is on the cards of Greece, and I think behind closed doors they are bolstering European banks, especially French and German banks, which have a large amount of Greek debt on their books. And if Greece is allowed to default on some of that debt, they don't want too much of an effect on those financial institutions. And then for Greece to be able to exit the system that it's currently in an orderly fashion. So it does seem that the politics that have been coming out of the EU and the Eurozone are geared towards Greece coming out of the mechanism in hopefully an orderly fashion.
Is there any thought about the kind of time frame that policymakers want to give Greece to get out and fix its house and then come back in, say 3, 4, 5 years? Is there any such period of time that Greece has been given to put its house back in order, before it comes back?
Well, I think the Eurozone needs to ask itself a serious question about letting in countries that probably shouldn't have been let in the first place. And what we're seeing at the moment is countries on the periphery of the Eurozone, the smaller countries such as Greece and Ireland and maybe Portugal as well, they're affecting the core of the Eurozone. So I think if they come out of the mechanism, they should stay out of the mechanism, and the EU probably needs to look at the entire euro structure as a whole. It's got a combined or coordinated monetary policy in place, but it hasn't got that fiscal policy. It hasn't got a euro bond in place, and maybe going forward it needs to implement measures so that policy across the board is more coordinated.
Can I ask you whether the idea that Greece can exit without actually triggering the exit of Spain, Portugal, even Italy out of the mechanism? So the whole idea that you can actually exit Greece out of the euro system without actually triggering massive contagion with other countries seems to me to be, taking it a little bit far.
Well, that's the big unknown at the moment, because if Greece does default, what is going to be the knock-on effect to other European countries? We've also got to put into perspective that Greece contributes around about 2% of the Eurozone's GDP, which is not a fantastic amount, but Greece's presence within the Eurozone is having a massive effect on the other countries. And I think to reduce that contagion effect, the EU, the IMF and the ECB need to bolster the financial institutions within those countries and then allow Greece to default in an orderly fashion.
Would it not be a lot cheaper to just bail Greece out and get on with it? Keep them in and bail them out. Stop the contagion right there.
But then how long do you keep them in? And it's like paying off your neighbour's mortgage. Would you do that? I certainly wouldn't. And you can only carry on bailing Greece out for so long. They can only carry on implementing austerity packages for so long until there is civil unrest, and there is civil unrest in Greece. They've chopped jobs drastically. They've raised taxes. but it's having a huge impact on the civilians there, and at some point they've got to stop bailing them out, and Greece has got to go down the path of recovery by itself, or with the assistance of the IMF.
Just a question for you. Do you think the capital markets have priced in the eventuality when it does come, or if it does come, of a Greek default and an exit? Or do you think there's more to come when the event actually takes place?
Well, I think they've priced it in to a certain extent. It's very difficult to price in these events which haven't occurred before fully. So it certainly has been priced in, because all the movements within the financial markets, certainly over the last few months or so, seem to be centred around what's happening with regards to Greece, the Eurozone and sovereign debt. But there's always going to be that element of the unknown, and we could still see that further volatility to the downside. Equities look pretty cheap at the moment, but they certainly could get cheaper, and we could see money flows moving back into the dollar, back into gold.
With regards to what the best scenario would be for Greece, and when we look at what happened to Ireland and the fact that they decided to default on their debt, we know that they've recovered quite extensively. They've actually come back to the market this year, and they've raised money on the international market. What would be the best scenario for Greece at this point, the cheapest scenario? Because it seems this bailout that has been occurring is a very expensive and costly exercise.
Oh, absolutely, and I feel the best way forward for Greece, as I've mentioned, is for them to be able to revert back to their own currency, which would be the drachma prior to the euro, and then be able to export and get back on that recovery path. At the moment, the company seems to be restructuring. It's implementing austerity package after austerity package in order to keep its financial backers within the Eurozone happy. And the people, the civilians of Greece, certainly aren't happy at the moment. And until it's able to get back on that path to recovery, I feel that the path forward for Greece is going to be very tough.
Yeah, well, Manoj, I mean, at the end of the day, if Iceland can, of course, recover from a very negative default, which we know, of course, down the line actually creates quite a bit of negativity and lasts for quite a long time. If Iceland can recover, and Russia and Argentina as well, do you think that Greece can ever recover? Because I think that relative to the other countries, Greece has really received the most attention, despite the fact that it only makes up 2% of the European Eurozone GDP.
Mm-hmm. Well, I think Greece will recover at some point, but the global economies at the moment, they're not even in recovery mode, they're in restructuring mode. And what economies are doing is paring down debt, reducing that debt in order to get back on that recovery path. And it may take a little bit longer for Greece, but I think it's only a matter of time before it is back on that path and be able to pull back from the problems that it's seen over the last couple of years or so.
Manoj, one of the issues that seems to be plaguing markets at the moment is the whole banking issue, and it seems to be there seems to be some contagion towards US banks as well. To what extent do we know whether US banks are exposed either directly to these government's debt or to the other banks that may hold a lot of this debt?
Well, I think it's down to the banks holding a significant amount of debt on its books. For instance, in the last 48 hours or so, Dexia, which is Belgium's biggest bank and also part owned by France, they've been running into a lot of problems on the back of the huge amount of Greek debt that it has on its books, and also the fact that it hasn't been able to access short-term funding in the money markets, and it hasn't also written down a significant chunk of that Greek debt as well, which questions the credibility of the whole banking system, and which is why for the bank, Dexia, there's literally two options. It either goes bust or it's bailed out like some of the UK banks by national governments. And this is having, unfortunately, a knock-on effect to other banks as well. Deutsche Bank, we've had reported or updated the market today. Not so bad, but it's the more robust out of the European banks. But unfortunately, with some of these banks running into trouble, it's having that knock-on effect.
Okay, so Hlelo, with regards to some of the comments out from Ben Bernanke today, that there could be a possibility of more assistance. We spoke of it a little earlier today. Is that going to allay fears? Right now it's just talk. Do we need to see it put in action? Is it going to be in quantitative easing?
I think even if it does, it's not going to help. I mean, the question is, well, what is it going to do now? He's tried almost everything. He can bring a QE3.
Yeah.
He'll probably get the same response that making money 25 basis points cheaper is not the issue. Fixing the economy, you know, here's a question. Why is it that the most productive people in society seem to be central bankers? Everyone else is sitting at home, not getting a job working. Politicians aren't working on good industrial policy, on good legislation to create jobs. So I don't think it's going to work.
Manoj, just lastly to you, do you think that the ECB should be cutting rates, should be embarking on quantitative easing or some kind of stimulus package down the line?
Well, I don't think the ECB should have raised rates in the first place. They hiked rates earlier this year twice, which proved fairly unpopular because then it further unlevels that playing field within the Eurozone. And I think it's pretty much a foregone conclusion that the ECB will bring interest rates back down. And inflation should probably at this point in time be on the back burner as commodity prices begin to correct themselves and come back from the highs that we've seen in recent months. The ECB, the Eurozone, maybe not the ECB, but certainly Eurozone members should probably focus more on a looser fiscal policy, not too loose that they're not able to reduce their debts and they have the subsequent credit ratings, but a slightly more looser fiscal policy and encourage growth as opposed to looking at monetary policy. Stimulus spending has pumped up asset prices, it's pumped up equity prices and commodity prices. It hasn't had the desired effect of economic recovery, and they need to look at other measures.
Like what, Manoj? What are the other measures that one can look at?
Well, encouraging businesses to invest more, freeing up the labour markets as well, because unemployment is a massive hindrance here in the UK, in the Eurozone, and across the globe as well, certainly in the US as well, where unemployment is unsustainably high. And until we have measures to reduce unemployment and to encourage businesses to hire more people, the global recovery is going to stall.
Yeah.